Good morning, everyone. Welcome to our Tuesday morning trading room. Hang on just a second here. We'll get the screen share going on. Yesterday, a bit of a funny day. As you know, we were hanging out most of the morning, and we were actually waiting, or I was waiting for the market to decline. A little bit after we closed the room, about 10-15 minutes later, the market did finally give us that decline, so we were able to pick up a few dollars on a nice steady move lower. And after that, the market bounced a little bit, just went dead flat for the rest of the session. A very, very unusual day. Here we are opening just a touch higher. I don't think it's going to be the kind of gap that's really going to put a lot of pressure on the market, either higher or lower. Daily, we have a rather strong uptrend in play, but, well, here I might as well show you because it doesn't look like we are setting up for any trade just yet. It is just a couple minutes out of the open, of course. So if I build you a chart, okay. Here is your daily NASDAQ chart. Oops, there was your daily NASDAQ chart. Come back here. And even though the market is in a very, very long uptrend, and will probably continue in a long uptrend, overall, you can see that prices are starting to drift. I've mentioned this before, but Black October is normally a time when we see a correction in the stock market. You can see we're still holding the trend line here, but we are having a heck of a time staying above 6,000. Another thing that's a little bit concerning is if you take a look at the volume graph below here, and you see the corresponding price bars, the market's advancing, but look at what's happening to the volume. The volume is falling off. That's not what you would anticipate in a stronger market. So I think a lot of traders are seeing the same kind of thing. They're seeing a market that's struggling. We're still in an uptrend. There's no question about that. However, we're near the top end here of the trading range. We're back around the 6,000 area. And that could make things a little bit difficult. And I think more than a few traders are thinking, well, the volume's light. There's not a lot of support for this current rally. Let's see what happens as we get back to the highs. Can we get above and stay above, or is the market going to break to the downside? Normally what I like to do is, if I'm consulting a daily chart, I like to see the overall bias. Because if I'm in doubt, I can just take a trade that is in the direction of that bias. Oh, sorry, Gary. This is the NASDAQ, the NQ, the December contract. But you're going to see a similar thing here If I put up, say, an E-mini chart, you can see the same kind of thing. The E-mini actually looking stronger still. The E-mini putting in a strong rally toward the close. But it's almost like, we've got a gasping market. Here's the rally, nice little channel, but the market's falling off a little bit. Like, look at yesterday's session. That was a strong session, right? And yet this is the volume bar associated with it. So I'm not saying the stock market will reverse. Every time I try to short it, it turns around and bites me. So, take it with a grain of salt, if you will. But that's how things are starting to look to me. Okay, for those of you new in the trading room this morning, let me give you the quick rundown of what you're looking at here. This is the diversified trading system along with the Raptor. So these charts are the NASDAQ market. I'm also watching the E-mini and crude oil, but I think I'm going to switch the E-mini over to the euro currency. And that's on my other monitor, of course. Here in the top left, I have the Hawk Micro Scalper. The top right is the Falcon Swing Trader. The bottom left is the Eagle Trend Trader, and then the bottom right is the Raptor. And we're only, like I say, a couple minutes into the session. So we'll give them a minute here to sort things out. Let some of the dust settle. You can see here on the Hawk, we're producing now a first micro-macro cross higher. The Falcon had a trend change signal pre-market. The first signal came right here, but it was followed up with a couple of late filter entry signals. Those occur when your filter goes out of sync, comes back into sync. Trend line, however, never changes color. For those of you looking to do that first in-sync eagle signal of the day, there it is right there. On the opening bell, we got a buy signal, so the eagle also bullish. And last but not least, the Raptor. The Raptor is producing all kinds of signals, which is indicative of a choppy market, but we did get our first with trend signal right here. Oh, I guess it was actually right here. And it looks like it did rally far enough to at least hit our high probability target. Yes, it did. So we'll see what comes with that. Oh, Mark, you got nerves of steel here. Mark says, I took that second late filter entry signal right here for a quick 200 on 2 cars, all in, all out. That's the way you do it. Nicely done. So there's Mark's trade. I'm always a little nervous that early, but Mark's doing well with it. Okay, well, we're bouncing about a little here, so if we are in a bull trend, if we are going to see a rally here, this pullback is a good time to look for a buy signal. So we'll see whether or not we get a number 3 signal from there. Obviously, resistance here at 6,000. You can see that's where the market bounced again. It's a rather sensitive area. Mark writes, lately I found it good to strike early and be done early. I think you got the right idea there. Because look at some of these bars here. There's 547 on that one. Okay, well, that one's still forming. Just over 1,200 contracts traded on that one. Like, this is very, very light volume. 433 on this one. Let's see one of these heavier bars. Okay, 7,300, that's a little better. But overall, it's like nobody's coming out. Scott asks, how do you do that? All right, you left click on your chart, whatever bar you would like to highlight. If you have a 3 button mouse, it's the middle button. If you don't have a 3 button mouse, you can press on your wheel. And that will pull up the little info box. And if you don't have either of those, there is a tool. And I've never used it, so bear with me finding it. Oh, I think it's actually in your control panel. Nope, that's not it. Nope. Maybe it's this one. Nope, that's not it. You do have a tool here, and I'm sure it's at the Ninja. Oh, output window. Maybe that's the one. Nope, that's not it. There is in your Ninja here a tool that will display your information over whatever chart or whatever bar you've highlighted. Like I said, I've never used it. Oh, that won't be there. But there is one. I've seen it used. But the easiest thing to do is if you, like I say, on your mouse, if you have a 3-button mouse or a wheel on your mouse, just to press the wheel. And it will give you all the information that you have on the chart. So we've got the band edges, we've got the warning dots, we've got the support and resistance lines, and of course the volume. It's it's handy to keep an eye on those kinds of things because, of course, especially in a rallying market, in an advancing market, it needs volume to advance. There has to be some sort of market participation there. Okay, and that hard edge, that with trend hard edge bounce signal that I was waiting for, it looks like it printed right there, and we had some decent follow through from that one. Certainly enough, again, to find the high probability profit objective. Probably would have looked something like that. It wasn't much of a pullback, but it was enough. Pulled back to the hard edge. Remember, for you Raptor traders, whenever the market encounters the hard edge, we anticipate a reaction. Now, most times the reaction will produce a number 3 signal, and we should get enough out of the move if a signal produces to realize our high probability profit target, which would be $100. In the case of the NASDAQ, that's 20 ticks. Okay, so we're above 6,000. Yesterday's high is sitting around 60.10. All right, so they're stumbling a little here as we encountered the primary resistance line. And this is kind of the same as what we've been seeing the last few days, namely the market kind of staggering along, not really able to do much one way or the other. Yesterday, of course, I was wondering what was going on, and when I got offline, I heard about the shootings in Las Vegas, and we had an incident here in Edmonton. Not a shooting incident, but almost as bad. Some guy went nuts with his car and tried to run over a bunch of people. So I guess it's, when the stuff like that is going on, then it's worth checking the news. Oh my gosh, I'm just checking the news now. Tom Petty died. Wow. He was just in Vancouver a couple of months ago. That's crazy. Yeah. Yeah, Steve, go ahead. Steve's poking fun. He says, "What happened? A moose got run over?" Yeah, normally that's the extent of our our crime. I wish I could say things weren't getting worse. It's a different world, folks. Oh my goodness. All right, so we're getting another late filter entry signal here in the Falcon. Um, Given that this could also possibly be a test of the extreme, in this case the extreme being high, the retest, if the market turns from here, of course it's going to head lower. For those of you who are new and haven't heard that term before, you'll hear me talk about a test of the extreme. A test of the extreme is nothing more than a retest of a high or a low that shows the market can no longer continue the original trend. So in this case, we have a retest of the high, and the market comes up short. When that happens, we anticipate the market to head the other direction. Here we have a downtrend. The market comes up short on the downtrend. We anticipate a rally. This now a late filter entry signal, which is a reliable signal, but you see how it's also a late filter entry, so it's not clear yet which way the market is leaning. I suppose you could do an OCO order and you could just bracket it. You could buy above it. You could buy that breakout. You could short below. It is nice having the opportunity for a second push entry here. The second push entry, all that means is we allow the signal to engage, and then we see where the market flinches. and then we can place our order above or below that. So I'll demo the OCO order here, and you should have a stop in play. And if the order fills either long or short, it will provide me with a stop as well. And you can do this on, I don't want your Raptor traders to feel left out, but you can do it on the Raptor as well. It's the exact same setup. It's just a basic continuation signal. If the market fails from here and produces a sell signal, the Raptor will produce a number 2 signal. You will have all the parameters there for a counter trend trade. I mentioned this the other day, but counter trend trades tend to work best, well, when you have an obvious trend and when you have an obvious trend line break as well. Now, the problem with the Raptor is very often it will produce that signal before you get a trend line break. It doesn't mean it's not a valid signal. You can see how the trend line falls here. It falls right down where the target is, which would be the hard edge of the trading band. So the Raptor slightly ahead of the curve, if you will. Okay, here comes the market, and I think I'm going to change to a parabolic strategy instead. Not a lot of follow through one way or the other here. We're kind of stuck. All right, so we're short. Notice I didn't get a profit objective. That's one thing with the OCO order. You're not going to get a profit target. So you can add one manually by right-clicking on your chart. Make sure you select the right order. Now I'm going to hold my stops above the line. Give this trade a chance to work out. There's not a lot of bearish momentum here at the moment. I'll throw my break-even line on the other side of the median line. And I will use the primary support line here as a profit objective. They're sure taking their time. Come on down. Yeah, here's that number 2 signal that I was mentioning based off this test of the extreme. So the first target here for the Raptor signal, the hard edge of the trading band, so around 59.93. Well, they're taking their time, but at least they're heading in the right direction for our short position. This is really, really slow. I mean, really slow. I'm not sure. Well, I know I don't remember the market being this sluggish in recent time. All right, Scott has a question. Break up the monotony a little bit here. Okay, Scott's asking about the OCO order, how that's done. And bear with me here just a second, Scott. Okay. So with the OCO order, first you need to toggle your OCO on. Your OCO will always default to whatever your quantity is here. So if in manual mode you've preset, let's say, to trade 3 contracts, even if you're not in manual mode, your OCO will always default to that value. With the OCO orders, you need to remember that these are live the moment you put them on your chart. So for that reason, I tend to place them a little bit further away and then drag them in. To place the OCO order, right-click on your chart, and you can see now I've got buy 3 instead of buy 1. And likewise down here, set your sell order. And as I mentioned, these are live, so you can bring them in now to where you would like them to be. And if you cancel the one, you'll cancel the other. Now, Scott's asking, what about the stop loss? The stop loss will default to whatever stop strategy you've selected. So let's say I'm running the ATR strategy. So I accept that. Make sure I have it turned on. Otherwise, this won't work. You need to turn it on. So let's say I get filled here on the short side. Trade Manager will automatically give me a stop wherever that blue dot happens to be. That will be my stop strategy. If you don't have a stop strategy enabled, if you don't have this turned on, sometimes what will happen is you'll get filled on your OCO and the other order will automatically cancel as well. And you'll say, what just happened? And you'll check your P&L and you'll be down $5 or up $5, some insignificant amount depending which way the slippage went. So yeah, try to remember to have your trail indicator enabled. Select whatever stop strategy you would like, and then you will get you'll get your stop along with your OCO. And we're through the primary support, so I think we hit our profit objective here on this trade, and yes, it looks that way. So a nice little move to the downside. Looks like I probably could have ran that one out a little further, but I'll take the profit. Nice little run lower, no point in being too greedy. We'll probably see a little bit of a hiccup now that we're back down to the primary support line. Buyers are going to show up here somewhere. But I think it's fairly safe to say the market's got a little bit more of a bias to the downside today. We do have a bearish bent on the market today. Prashanth, nice to see you in the room again. Haven't seen you for a while. All right, Prashanth saying, can you please share your settings for the E-mini? Mine are all messed up. Okay, the default settings are going to work for 99% of the markets you're trading. Well, 90% anyways of the markets you're trading. Normally an instrument that trades at $10 a tick or less will work just fine with the default settings, and that's the vast majority of markets. The exception is the E-mini S&P, and unfortunately it's also one of the world's most popular markets, and so we need to make a slight adjustment. And these are the alternate settings, which we refer to as the 4, 4, and 6 settings. 4, 4, 6. The easy way to remember that is a telephone prefix in Moose Jaw, Saskatchewan. So there you go. You'll never forget it now. First thing you're going to want to do is you're going to need to change your data series from your normal 8-tick chart to 4. So that's going to speed things up a little bit for you. Then you need to go to your indicator window and go to your Raptor. And we're going to make some changes here to the cloud size. Oh, well, look at that. Mine didn't change, so good chance for me to do that. There is an approximate relationship between the clouds and the bar size. The larger cloud is about 1.5 size, pardon me, 1.5 times the size of the faster cloud. And the brick size is normally 3/4 of the normal brick size, but we're not going to reduce it that much. So we're going to change our hawk brick to 4, our one cloud to 4, and the bigger cloud to 6. So 4, 4, and 6 with a 4-tick brick. And when you've done that, you can apply your changes. And voila, there you go. I would suggest that once you've made those changes, you save it as a template so that you don't need to do this all the time. And I just call mine Raptor Fast. Raptor version 2 Fast. And next time you load it, you can already have it on your chart instead of having to rebuild it all the time. I was wondering why I wasn't getting a signal in. My clouds and my brick sizes were off. Oh, shoot, Eric, this isn't the E-mini. This is the Euro. Okay, my bad. But that's how you set it up for the E-mini as well. So if you're looking at my chart here and you're saying, my E-mini doesn't have those values, that's why. Yeah, this is the euro dollar. I forgot I made that change this morning. But that's how you set up the fast chart. So I hope that works. Yeah, I see a few of you caught that I was on the the euro. Well done, Mark. Mark says another 300 on that Falcon trend change, 500 on the day, goal hit, and now I'm just a spectator. That's where you want to be. Now that the market's looks like it's in the downtrend, and you can see that, you know, our support and resistance line, this blue line right here, has been tagged. We're getting a little bit of a reaction. Can you guys see those lines very well? I know those dark blue lines are sometimes hard to see. Yes, okay. Otherwise, I'll change them. Scott's asking, so the E-mini Dow, the YM gets the fast setting? No. The S&P E-mini, that would be the ES, gets the fast setting. The way you can tell whether you need to adjust the settings on your chart is really quite simple. If you open up your chart, well, here, I'll do it for you. So we'll load the E-mini on here. It'll take a minute. Okay, this is how you can tell you need to adjust your settings. These vertical lines are daybreak lines. So this is an entire day's trading here, and you can see you didn't generate a single signal. In fact, you didn't generate a signal for the last couple of days. Now that's all well and good if you want to trade end of day, or if you're prepared to take a signal and then just let it ride for a few days, then that's fine. You don't need to make any changes. You can see the Raptor is still providing some very good signals. But if your plan is to trade intraday, this isn't going to work. So if you open up your chart and your lines, your daybreak lines are all squished together like this, it means you're going to have to try a different setting. The alternate settings of 4, 4, 6 will usually do the trick. Now conversely, if you open up your chart and you're scrolling through your chart, and there's nothing but data, and you don't get any daybreak line, and you're looking at your time stamps along the bottom, and they're reading like 758, 758, 758, 758, 759, 759, 759. In other words, you're producing too much data. It's coming out too quickly. Then you'll probably need to adjust your chart the other way. You'll have to make your brick sizes larger. That's much more rare, however. In fact, if it wasn't for the E-mini S&P, we probably wouldn't even have this issue. The E-mini, the one that's kind of messing things up. So, like I said, most times it's something you don't even need to worry about. But if you open up your chart and it looks untradeable to you, then try to go with the faster settings. It's one thing about the new Raptor as well. It's more tweakable than the DTS system, which is a locked system. Scott's asking, so the YM you would set at 6 ticks? No, the default settings, I'm assuming you're talking about the Raptor now, the default settings are an 8-tick brick, and then your system defaults, which would be here. So your Raptor defaults are a 12 and 8 tick cloud and a 6 tick hawk brick on the indicator. Now, if you're trading a market that seems really, really slow, and sometimes at certain times of the year I've adjusted the brick size a little bit just to make the chart a little bit more responsive, you can dial down the brick size, sure, and that will introduce a few more signals. Just bear in mind that more is not necessarily what you're after. More signals don't necessarily make better signals. Crude oil's dead sideways today. The euro's not doing too much this morning either, and the NASDAQ and the stock market seems to be in a little bit of a decline. But we may need to wait for a little bit more of a pullback here first. We'll see, maybe we can grab one more decent trade. Round out the morning. Okay, so we're floundering a little bit here. The Raptor producing a number one signal. When the market is this quiet, it's always advisable to use a second push entry. So we allow the signal to engage. We see where the market flinches, and then we can use those parameters to initiate a trade. Honestly, the lack of momentum bothers me a little bit. We did have a decent move here to the downside, but we'll see whether we get any follow through on that, or if the market's just going to bounce around a little bit. All right, a little bit of a bull push now. 59.80 area, of course, was a pretty active area yesterday as well. You can see that's kind of where that trading range fell. It doesn't invalidate this signal. Again, this is why we want to use a second push. Part of the problem I'm having with the trade is where to place the stop. I could use the median line here, but that's a little cozy. The ideal stop is actually this swing high, but that's going to put it a little bit out of reach for me, unless I go into manual mode and just take the trade regardless. All right, well, we're drifting again. Scott says for the NASDAQ, the stop loss, the fib extension from the low put 100% extension at 59.95.75, right where it turned. So right over there. It's not unusual for a market to make a reaction at around the halfway point. And it's not necessarily because fib levels or whatever, but rather traders see value when the market has made a move lower, and now they can pick it up instead of paying more for it, or down here they can sell it at a better price up here. So yes, you should always keep a lookout for retracements. Advancing markets will always seem to rally from the bottom half, bottom third. Here, let me build you a chart and I'll show you what I mean. Okay, here is a British pound chart. And it's just a market. I just selected any market. So if you take a look at, that might be a little bit too choppy. But let's say we consider this as the trading range. There's the breakout. The market will always try to recover from about the bottom half, bottom third of the range. And the declining market would be the opposite, right? A declining market would try to recover from up here. So an advancing market will always try to recover around the bottom half, bottom third of the trading range, and a declining market will do the opposite. So if we deem this to be the next trading range, and you're watching the British pound, okay, you might consider buying here, but you'll really consider buying if the market gets down to 131, right? Because that's going to put it about halfway inside that trading range. So you can put fib levels on this. If you like, it's not necessarily the fib levels that are doing it. Rather, it's just the nature of the markets. Okay, gold's a little bit too choppy. Let me find something that may be trending a little better. What is trending now? No, soybean oil's a bit of a mess. Nothing. Nothing is really trending right now. Let's try the Aussie dollar. Yeah, the Aussie dollar not really trending either. Okay, but you guys get the idea. And now we are trying to recover that earlier move lower. Oh, I suppose I should have gone to a like a 5-minute or 15-minute chart instead of the daily chart, that would have shown it a little better. Well, I'm starting to wonder whether that was the move of the morning. Sure. Scott says, can you double check your NASDAQ settings? Mine didn't mark a number one. I didn't make any changes to mine. The only change I've really made to my NASDAQ or my Raptor period is resetting the signal sensitivity for the number two signal. That's the soft edge, buy or sell. Now, folks, you shouldn't get too excited. You know, sometimes it depends on the data. If we're out a couple milliseconds, or if my data plots a little bit earlier or a little bit later, looks like I've got 10 days of data loaded. I will refresh the chart for you though. It's a good idea to anticipate these signals anyhow, because these are, you know, these are prompts to help you along. But you want to get to the point where you're going to recognize a number two signal is building even before the number two signal prints, right? We've got a trend, we've got a test of the extreme, we produce a counter trend signal. So we're already anticipating that signal. We come into the hard edge, we're going to anticipate a number three signal. We've got clouds crossing, we're going to anticipate a pullback, we're going to anticipate the number one signal. But you should never trade in a vacuum. And by that I mean, for goodness sake, don't ignore the left side of your chart. I've mentioned this before too, but I can't tell you how many times people will send me their chart and no word of a lie, this is what their chart looks like. Is like, how can you trade this? How do you know what's going on? You have no reference. How can you trade a chart like that? Oh, well, this is the only way I could format my chart so that I can get a half a dozen markets displayed on my monitor. Well, first off, you don't need to trade a half a dozen markets. But if that is your objective, spend another $100 and go buy yourself another monitor rather than jam up your chart like that, because you're not doing yourself any favors. I condense my charts this way so I at least get a little bit of history, but I don't do a trade until I actually look at the chart. So when I'm getting a number one signal like this, yes, it's with trend, but I've also got to take into consideration the whole context of what preceded it. And I'm looking here and I see a market that's very, very stagnant. You know, it's really dragging its feet. So is this a valid signal? Definitely it's a valid signal. I would probably take a second push entry on the signal, so that means my stop's going to go here, my entry. My stop loss, however, is the problem. I don't have enough structure here that I can say, yeah, okay, I'll put my stop loss right here, because that's a little bit too tight. The market didn't bring me in, but had I taken it on the entry, I would have got tagged for $200. So for me right now, the only good stop is up here above the high, and I just can't afford that. So I gotta let it go. Likewise with this number one signal here. Am I saying the market's not going to go up? No, I don't know. It very well might go up. We have a second push opportunity. I would have to cover the trade below the low, but again, it's out of reach for my account. So I've got to wait for a little bit more structure, a trade that I can get behind with a little bit more confidence. And right now, I just kind of see a market that's drifting. if anything, I would favor a sell signal just because the market has been inclined to offer a little bit more on the short side. So here now is a number 2 signal. So let's say I figured today is a bear day. I'm only going to look for selling opportunities. Well, now I have one, don't I? I have a number 2 signal. I have a chance at a second push entry. Right? The signal is engaged, the market is flinching, and I can probably get away with placing my stop above this swing high right here. So we've got a few minutes still. We can see if this trade's going to work out or if this is just going to go flat again. We got a whole lot of bouncing back and forth going on. Reminds me of our grandson's birthday party on the weekend. We got 13 kids inside one of these bouncy castles, and it's just going back and forth. Not making much sense. Those things are a great invention, let me tell you. I'm thinking about investing in a couple just to rent them out. That is strange. Scott says, okay, this is strange. I moved my trade forecaster off the Raptor NASDAQ chart and the number 1 marker showed up exactly like yours is showing. I don't know what to tell you, Scott. That's a Ben question. Let's see if Ben's in the room today. Sometimes he sneaks in here. Aha! Ben's hiding in the background. All right, Ben, you may be getting a question from Scott. Why the trade forecaster would make a difference, why his number 1 signal would print or not print. All right, boys and girls, if we don't get much going on here, we're going to pack up our toys and come back tomorrow. You see, we're starting to produce too many signals as well. This is always indicative of a sideways market. When you're starting to produce a lot of signals, not getting any follow through, so obviously it didn't want to go lower, so this number 3 signal can actually have some giddy up go to it. I'm too late on the number 3 and I'm not going to chase it. But it's very likely going to retest this whole 6,000 area, which is obviously a number that the market is dealing with this week. Wow. Zero follow through. Okay, well, this is good. If the market is going to hold here, we'll call it 59.97. And we come back with yet another sell signal, that's very likely going to move somewhere. Why do I say that? Well, the market tends to do things in pairs. So we've had a big move lower, but we haven't really had the second move lower. I don't think this one is going to count. I think we're going to see, it owes me one more decent move to the downside. Decent, of course, a relative term. Here to the upside, we've had two pushes to the upside. I know some of you are looking at this and saying, well, why doesn't he count that one? Well, we kind of got the double top forming on this one. So I'm going to blend this first and second one together. So there's two pushes to the upside. Currently we're holding here at around 59.97. So if the market can't get over that hurdle, there is a good possibility it will try to head lower. May not be a monster move lower, but maybe back to the lows here around 59.80. Mark says a lot of resistance at this level. I have to agree. This whole area that we're skewered by the median line here at 59.94 range. That's a big level for the market. There is a lot of trading going on here. For those of you who follow things like value areas, I wouldn't be surprised if the point of control is going to fall here around 59.94, 95. Just look at how many times the market has traded there. You don't need the value area software to figure that out, but you can just kind of eyeball it as well. Just the sheer amount of time the market has spent in that neighborhood. Okay, well, they're not budging a whole lot, so we'll leave them alone for now. Not a bad morning. One trade. I'll probably pick up another one this afternoon, maybe closer toward the close, if we can get out of this sideways chop. Currently, I'm still favoring the short side, so I'm going to be a little bit more aggressive on a sell than a buy, but I'm not going to force it. If it doesn't look like a good trade, I'm just going to let it slide. And I suggest you do the same. All right, boys and girls, I'll see you again tomorrow, and we'll go from there. Bye for now.